Lemkin solitaire and equalizer seeders and planters offer disruptive innovation like vertical banding, dry and/or liquid onboard fertilizer, and great prices. Go to lemkindemo.com for more information and to request a demo.
We're joined right now on Real Ag Radio by Arlan Suderman of StoneX. Arlan, it's great to have you back on the program.
Yeah, it's good to be back, Sean. There's a lot going on to talk about.
Yeah, I want to start off with China. And we saw recently Canada's been dealing with tariffs on a number of different ag commodities, aquaculture products, but as well as pork, field peas, canola oil, and meal. What's demand like in China right now? Are they afforded the opportunity? Is the timing right to be able to apply these kind of tariffs?
Oh, yes and no. Overall, their economy continues to struggle. It's a real problem. They've been stimulating it since September to varying levels of success. They've seen some sectors where they've poured the greatest stimulus in, see some increases, but the data shows that that increase in demand is purely due to the stimulus and nothing more. When you look at consumer confidence levels, they still remain near record low levels, and that's tied closely to the property sector. And the property sector has seen a little bit of an uptick in housing demand. But for the uptick that they've seen, they've only decreased the inventory of housing by like less than 5%. So they have some massive problems. And why is housing such a big factor? Here in the United States, we talk about the wealth effect. Consumers continue to spend if their 401ks are growing in value and if their house is growing in value. They feel wealthier, so they spend money. In China, their wealth is tied up in their property. And so if their property is gaining value, they have that wealth effect. If it's losing value, as it has been, then they're contracting their spending. They're fearful, and so they don't spend. And so that's the situation they're finding themselves in. Meanwhile, they're really worried about jobs, with much of the West now putting tariffs and restrictions on various products that they have. That's reducing their manufacturing. And even Russia now has started to put tariffs on EVs that were coming from China. China owned 60% of the car market there prior to this. And so even Russia has now started to pull away from China and buying. So they're in significant trouble right now. Specifically, when it comes to soybeans, for example, this is the time of year they're going to get them from Brazil and Argentina, primarily Brazil, because the currency exchange rates are going to be cheaper. But when it comes to rapeseed meal, that's going to be tight. So I anticipate they'll probably use more soybean meal because that's readily available right now from South America. Most of the other products, they're kind of pulling back somewhat in demand and getting it from elsewhere. I think rapeseed meal is probably the one that's going to hurt them the most, but they're still sticking with those tariffs on Canada.
Yeah, do you see them having these tariffs in place for a long period of time, or is this a summer sort of fling, or is it just too early to tell?
The last time they did this, it seemed like they did it until it really got painful at home, and I anticipate that to be the case as well. And I think that's the way most countries approach tariffs. They'll do it until it becomes real painful at home and they're losing political clout. Of course, political strength in China is something different than it is here, but it's still a factor overall. And right now, China finds itself increasingly put in a corner, being isolated, and even its brick and road initiative trade that goes into Russia and into Eastern Europe via the railway that they've built there, that even is slowing down dramatically in trade. And so they are feeling increasingly isolated. And so I see Xi Jinping, he has removed everybody from his inner leadership circle who would disagree with him or tell him news that he doesn't want to hear. And so I fear that he's not hearing what he needs to hear. And so that is a concern. And when that happens, typically leaders just kind of dig in their heels and kind of maybe increase the battle, so to speak.
And it's kind of hard when you look at some of the trade flows when you have threats of tariffs or anticipation of thicker borders on in trading lanes.
Mm-hmm.
We see front loading. We saw that in Canadian canola going to China last fall, Canadian potash going to the U.S. prior to the 25 planting season. That front loading can be a little bit of a distraction from like, oh, there's increased demand. Well, yeah, maybe over the course of the year it's going to work out to about the same number.
Yeah, and even though USDA claims that's not why they left their balance sheets for corn and soybeans unchanged, even though the export pace is well above the seasonal pace needed to hit USDA's target, and corn it's almost 200 million bushels above. Um, I think that there probably was some of that front loading ahead, not to the extent perhaps that USDA thinks, but I think there was some, not just because of the tariffs, but because of the initiative that President Trump is proposing to charge a port fee on Chinese built ships or ships coming from fleets that contain Chinese ships. And I think that has increased shipments of Sinograin purchased soybeans going to China. The tariffs are less of a deal with them because they're state run, so they'd be paying themselves basically the tariffs, but the fees would be a totally different thing. And so I think there we've seen some front loading of the demand ahead of that, not knowing exactly what that's going to be. But the whole industry right now is in turmoil, not knowing exactly where this is going to go.
Let's talk about that proposed idea of fees on Chinese ships or companies that have Chinese ships in their fleet. Details are just starting to come out this week. I had somebody tell me yesterday, Arlan, this is the most consequential policy out of the Trump administration in terms of impact on ag in comparison to anything that has been
Oh
talked
yeah.
about so far.
Oh yeah. The potential impact is there for impact to be far greater than the tariffs. I personally think that there will be a more pragmatic, let me say, a pragmatic approach before it's implemented. I do believe that President Trump has the conviction that rebuilding our ship industry is necessary for national security and wants to do something to do that. Um, but doing it as proposed would kill trade, significantly hurt it, because 55% of the ships out there right now are Chinese built. So most of the fleets have Chinese ships in them, let alone those that are directly Chinese flagged. And so, for example, I calculated up if you got one Panamax ship carrying corn, that could be up to 57 cents per bushel increase in cost. Um, that would, dramatically impact the competitiveness of U.S. corn on the world market. And that's not just going to China. That would be a Chinese ship that might be going somewhere else to another customer or something like that. So I do think that there will be something more pragmatic come before it's actually applied. But until we hear what that is, there's going to be a lot of concerns. And we're already seeing shippers back away from making commitments or putting into the contract that the buyer has to be responsible for additional fees that may be charged.
And one thing I've picked up on in compare, the fee on Chinese ships versus the overall tariff strategy. We've heard industry groups a little bit quieter on, let's see what President Trump's up to here negotiating. But on the ship fee, there's a lot more pushback and a lot louder pushback in terms of the consequences.
There is, and that's another reason I think that we'll end up with something more pragmatic because I think cooler heads will prevail and we'll see, we'll come to a more reasonable way to get to his end objective than just killing trade.
What's your thoughts on the meat sector? It's been a pretty good run here for the beef industry. What's your thoughts on proteins?
It is, and I was just reading over before we talk some of the latest data and looking at it and how the cutout is really gaining in value here. And it comes back to the consumer. And we saw a dip in the market yesterday, and consumer confidence numbers came out. Because if the consumer's not confident, historically, they don't want to pay up for the higher cuts of meat, but yet we saw the choice cuts jump. What was it, $8 or so, and the consumer's seemingly still there, and that's been surprising overall. And I think the industry is really nervous. How long will the consumer stay there? Protein supplies are tight. When we look at beef, when we look at pork, they're tight. We're importing massive amounts of beef. We're feeding to record carcass weights in order to try to supply it, but they're still tight and the consumer is still paying for it, which is really surprising. The question is, how long will that continue? Consumer confidence dropped below the range that we've seen over the last several years as the consumer's worried about where tariffs are going to take us and how inflationary will that be. And so the ag industry is concerned.
Chinese pork production, is it I guess what's its state? And I'm thinking relative to some of the meal demand.
Yeah. Overall, when we look at Chinese pork production, it's kind of stabilized. It's been in decline because population's been in decline. Per capita consumption of pork has been in decline. And so when we look at soy meal, they've reduced inclusion of soy meal from 17% down to 12.5%, but now they're increasing it a little bit to replace some of the rapeseed meal that was going in. So now the thinking is from our people in China that we will see a little bit of an increase, maybe to 13.5 to 14% inclusion of soy meal in the rations, which is reversing that trend that we've seen. But overall, we're seeing demand for pork can decline because of population decline, and that means that soybean demand is flattening. Had a conversation with one of our top brokers in Brazil yesterday and one of his top customers about this very thing. Demand from China is really flattening. The last 2 years, we've seen strong shipments because they've been building up their reserves against a potential tariff war with the West. Geopolitical tensions rising, so they're getting those reserves built up. But once they have those reserves built up, I think we'll see the full effect of that declining demand.
Okay, and to wrap up, keys that you're focused on heading into 2025 planting here. I'm sure the corn acre number is one of them, but is there any others?
Well, the tariffs and the shipping fees are the big one. We'll learn a lot about tariffs over the coming week to 10 days. Particularly, and then we have the acreage reports coming out on Monday and the stocks reports, both of which could have some significant surprises. I'm centering on around 94.4 million acres, up from 90.6 million of corn last year. On soybeans, I'm dropping it down to 84 million, down from 87.5 million. And the key to remember with both of those acreage numbers, if we have a good growing season, which one of our forecasters today is calling for a good growing season, then we'll build stocks. But if we have any type of heat and dryness come in and drop yield 5%, we're going to be tight on stocks on both. So both are at play this year with those acreage numbers.
Well, Arlan, really appreciate you joining us here. All the best to you, and we've got lots to talk about as we as we look at 2025 going forward. Thanks so much.
Thank you, Sean. It's been a pleasure.